Today, we're at the Legacy Home Loans office with an industry veteran to help you increase your knowledge on reverse mortgages. Now, whether you're a homeowner seeking financial flexibility or simply curious about this unique option, this video will unravel the complexities and clarify the benefits and considerations surrounding reverse mortgages. Now let's head inside and introduce you to our special guest. Hi, it's Brooks Marr, the M&G Real Estate Advisors, here today with Chip Hayes, Senior Loan Officer at Legacy Home Loans with over 20 years of lending experience. Now, reverse mortgages seem to be somewhat of an enigma to many, so Christopher and I thought we'd make a quick, informative video to help answer some common questions we get. Now, Chip, thanks for taking the time to provide some much-needed clarity for those that are considering a reverse mortgage for their home, or simply helping a loved one decide if this is a viable option.
Well, Brooks, thanks for having me, and let me say that I appreciate the time you and Christopher put into educating your clients and making these informational videos that help others.
Thanks, Chip. You do a great job as well helping your clients understand the complexities in the mortgage process. We believe the confident real estate decisions are the result of being well informed, and we take great pride in providing that. Now, let's jump into these questions. First, let's start with our topic of the day. Can you explain what a reverse mortgage is?
Absolutely. A reverse mortgage is the type of loan that allows homeowners, typically those that are 62 years of age or older, to convert part of their home equity into cash. Instead of making monthly payments to a lender, as with a traditional mortgage, the lender makes payments to the borrower.
Okay. And how does a reverse mortgage work?
Well, in a reverse mortgage, the homeowner receives payments from the lender, either as a lump sum, monthly payments, or in a line of credit. The loan is repaid when the borrower sells the home, moves out of the home, or passes away. The repayment typically comes from the sale of a home, and the borrower and their heirs are not personally responsible for repayment of more than what the home is worth.
Now, with any loan program, there are always qualification standards. What type of properties qualify for a reverse mortgage?
Really good question. Eligible property types include single-family homes, 2 to 4 unit properties, manufactured homes built after 1976, condominiums, and townhouses. Just to be clear, co-ops do not qualify.
Understood. And how much money can I get out of my home through a reverse mortgage?
Great question, Brooks. The amount of funds you are eligible to receive depends on your age or the age of the youngest spouse when there is a couple. Appraised home value, interest rates, and in the case of a government program, the FHA lending limit, which is currently $1,089,300 as of 2023. If your home is worth more, then the amount of funds you may be eligible for will be based on the FHA loan limit. In general, the older you are and the more valuable your home is, and the less you owe on your home, the more money you can get.
Okay, now Chip, what happens if I already have an existing mortgage?
Well, Brooks, that's no problem. Actually, you may qualify for a reverse mortgage even if you still owe money on an existing mortgage. However, the reverse mortgage must be in the first lien position, so existing loans must be paid off. For example, let's say you owe $300,000 on an existing mortgage. Based on your age, home value, and interest rates, you qualify for a $325,000 mortgage under the reverse mortgage program. Under this scenario, you'll be able to pay off all the existing mortgages or mortgage and still have $25,000 left over to use as you wish.
Well, that's pretty good to know. And what are my payment plan options?
Well, you can choose to receive the money from a reverse mortgage all at once as a lump sum, fixed monthly payments, either for a set term or for as long as you live in the house, as a line of credit, or a combination of these.
Well, that's nice. I should have asked this earlier, but how does the interest work on a reverse mortgage?
Well, with a reverse mortgage, you are charged interest only on the proceeds that you receive. Both fixed and variable interest rates are available.
Okay. And do I have to pay my property taxes?
Yes, there are 3 main responsibilities as a reverse mortgage borrower. You are required to pay your property charges, such as property taxes and homeowners insurance, on time. Ask your lender about their insurance guidelines. Your home must be kept in good repair, and your home must be your principal residence. Failure to comply with these responsibilities is a violation of the loan agreement, triggering a default.
Sounds like you definitely want to make sure you take care of those responsibilities. If you find this information insightful so far, give us a thumbs up and subscribe so you don't miss out on any of our future videos. Now, these next questions are based on conversations we have had with our clients and/or their family members. First one up, Chip, can I outlive a reverse mortgage?
No, you cannot outlive a reverse mortgage. The loan becomes due when the borrower sells the home, moves out of the home, or passes away. If the borrower passes away, the heirs can either repay the loan and keep the home or sell the home to repay the loan.
Next, will I lose my government assistance if I get a reverse mortgage?
Really good question. I get this a lot. A reverse mortgage does not affect regular Social Security or Medicare benefits.
Now, what is a maturity event?
A maturity event, which may cause your reverse mortgage to be called due and payable, once a loan has reached a maturity event, then no additional funds may be advanced from a reverse mortgage. Such maturity events include all borrowers have passed away, all borrowers have sold or conveyed title to the property, or to a third party, the property is no longer the principal residence of at least one borrower for reasons other than death, borrowers failed to pay property taxes or insurance, and all attempts to rectify the situation have been exhausted.
Now, here's a pretty good question we've actually heard very often. Are there any risks of a reverse mortgage?
While reverse mortgages can provide financial flexibility, there are risks to consider. For example, the loan balance increases over time, potentially reducing the equity to the heirs. Interest and fees can accumulate, making the total repayment amount significant. Additionally, maintaining property taxes and homeowners insurance is crucial to avoid default.
Okay, well, that was pretty helpful. So, under what circumstances should I not consider a reverse mortgage?
Well, because of the upfront costs associated with a reverse mortgage, if you intend to leave your home within 2 to 3 years, there may be other less expensive options to consider, such as a home equity line of credit or an interest-only loan. Also, if you want to leave your home to your children, then you should consider other options because in many cases, the home is sold to pay back a reverse mortgage.
Now, here's an interesting question. Can the lender take my home from me?
Really good question. The lender does not take ownership of the home with a reverse mortgage. The loan is repaid through the sale of the home. And if the home's value is not sufficient enough to cover the loan balance, the FHA insurance will cover the difference.
Now, Chip, I appreciate the time. And last question, and one many have themselves watching this video. Can a reverse mortgage loan be used to buy a home?
Yes, there is a home equity conversion mortgage, also known as HECM. That allows people 62 and older to purchase a new principal residence with HECM loan proceeds. One benefit of a HECM for purchase reverse mortgage is that it allows you to avoid using all your retirement assets to buy a new home. You can also refrain from using your fixed monthly income on a monthly mortgage payment, which is typical of traditional mortgages. With a HECM for purchases, borrowers have access to a financial tool that helps them to avoid draining assets, acquire a more fitting home, and an age where they don't have to make monthly mortgage payments. Remember, reverse mortgages are complex financial products, and it's crucial to fully understand the terms and implications before proceeding. Consult with a financial advisor or mortgage professional is strongly recommended.
Now, if you have any questions that we didn't cover, feel free to contact Chip Hayes with Legacy Home Loans. His contact information is in the description below. Christopher and I are here to help you navigate the home buying and home selling process and be a trusted resource you can rely on. If you feel there is someone you know who could benefit from this information, give it a share. And until next time, thanks for watching, and we'll see you on the next video.